Welcome back. I'm Pratap here. Today is the 10th January 2024. If this is your first visit to our channel, and if you would like to attend our complete free training on supply demand zone price action course, I'm providing the link to all the video lessons in this YouTube video description. You can click the link and access the playlist to supply demand zone price action course. Even the links to all the training videos are available at our Telegram channel. Even the link to our Telegram channel is also accessible at this video description. So please make use of this opportunity to strengthen your skills related to supply demand zone price action. Now let us analyze the high liquidity zones generated in our yesterday's report. Let us look into the executed trades. Yesterday we have identified 4 high liquidity zones. The first one is Bandhan Bank. This is a high liquidity daily demand zone. And we got a successful trade in this zone. And we already fine-tuned this zone to the 75 minutes time frame. We have identified a fresh 75-minute zone. So let me go to the 75 minutes. Yeah, here we have identified a drop base and a rally, the hidden body you need to add, the rally candle. And inside this 75 minutes high liquidity zone, we identified a fresh 15-minute zone. Let me show you the 15-minute show. So this is the 15-minute zone. We have a rally candle, a medium size, 2 base candles, and again we have a rally candle with hidden body. And the structure of this zone, inside this zone, the structure is good at 5-minute zone. But the thing is, this 15-minute zone itself is at the minimal risk level. If you further fine tune this zone, say already I fine tuned inside this. Let me show you the 5 minutes time frame level. See, here we have a drop candle, base candle, and a rally candle. And the risk is very, very, very minimal. But the problem is there are higher chances of missing the trade because the risk is very low. Sometimes what happens, prices before entering into this 5 minutes level zone, they turn up from the 15 minutes itself. That's why previously also I told you, I think a couple of times I told you, if the 15-minute zone is, the risk is low, do not try to optimize even further. There are many times you will be missing the trades. So that's why, in case if anybody waiting for a trade inside this 5 minutes zone, the 5 minute zone risk is at the least level. There are higher chances of missing. So today, prices did not enter into this 5 minutes level fine-tuned area. It just entered into this 15 minutes level area, and again it reached the target. Okay, again target is something different here. Let us discuss that point. Let me show you. Generally what we do, we look for 15 minutes target. See here, this is the 15 minutes target. We have a rally candle, base candle, and a drop candle. This is the 15 minutes target. And this is the 5 minute zone. This entire thing is, 15 minutes zone, not 5 minutes. This entire thing, whatever you are seeing with this orange color, that area is a 15 minutes area or entry area. And if you calculate the risk reward from here till this 15 minute supply zone, the RR is 1 is to 10. Even if you calculate the ROI as per one future slot, it is close to 13, 1 is to, it is close to 13% ROI. Achieving 13% ROI during the intraday is not a practical. I'm not saying it never happened, but it happens in rare scenarios. Maybe once in every 100 scenarios, something like that. Most of the times, intraday, during the intraday, getting 13% or close to 13% ROI is almost impossible. So then what we have to do? The simple, previously I explained in one of the videos also with all the calculations part I explained. If your target is very high target and if you feel it is almost impossible to achieve the target during the intraday, what is the best methodology you have to do? Because we know our average ROI during the intraday is 6.1%. Just set that 6.1%. When prices reaches to near that area, you can exit. That is one thing. Another approach is, see, generally when you have the 1 is to 10, achieving 1 is to 10 is very difficult. So once the prices reach 1 is to 4 or 1 is to 5, exit from your trade. Whenever it is reaching 1 is to 4 level or 1 is to 5 level, you can exit. Or 6.1% your average ROI, you mark that. Once prices reaches near that area, there you exit from your trade. That way you can plan your trade. See, already what I did, I think most of you are those who completed supply and demand zone courses from outside. You might have already learned these long and short positions, the tools, long position and short position. Because today our position is long position, I just drawn that. Anyway, for those people who did not learn, I already promised I will be teaching these tools after completing our second phase of the training. But anyway, those who are already haven't completed the second phase of our training, probably you are not doing the high liquidity zones, I believe. Your current focus is on learning the concepts. Still, if anybody following these videos as well as training videos, please understand that this tool I will be teaching you at the end of the phase, probably during this month. But others who are already aware of this tool, this is our stop loss and this is our target. Actually, I adjusted to 1 is to 5. See the target here. Because the letters are very small. If you are watching this video from mobile phone, you may not be able to see. So that's why I'm always recommending, do not watch the videos from the mobile phones. Try to watch the videos from your laptops or from your televisions. Especially those who are in the trading, always make sure you should have at least a larger monitor. Do not compromise to mobile screens and make yourself get some disadvantages. Okay, here we have a target of 1 is to 5. I just set that mark, 1 is to 5. Or even you can set to 1 is to 4 also. But when I adjusted to 1 is to 5, this is the level it has come. But see what happened today. The price just entered into this 15 minutes area. After that, see a rejection and then how prices moved. And within this 15 minutes candle itself, it reached the target. The 1 is to 5 it achieved. A little above 1 is to 5 went and then again it came down. But actually, strictly speaking, it is not the first 15 minutes candle. It is the 5 minutes candle itself. The target is achieved. See, now I changed the time frame. See, your entire target is achieved in just 5 minutes time frame. In which candle? 9:30 candle. Morning 9:30 candle. Prices entered into the zone. the 15-minute zone, and then immediately it started moving up, and then it has given 1:5. RR it has given, which is 12,500 rupees. In just 5 minutes, you got a profit of 12,500, and which is 6.7%. A little above our average return. 6.1 is our average. Even if you would have exited at 6.1, if you would have exited at 6.1, you would have got around 11,500 rupees profit. Maybe additional 100, another 1,000 rupees profit you got if you would have set to 1:5. Anyway, it doesn't make much difference whether it is 11,500 or 12,500. But what makes the difference? Your entire trade is finished in just 5 minutes. So Bandhan Bank is a powerful trade, because we know why it is a powerful, because already we have seen just before this zone many times. See here what happened, the prices before entering into, there is an entry buffer here. I think around one and a half month back I explained you entry buffer. In case if you did not know entry buffer concept which I explained, there is a special video on that. Please go to NeoStock terminology playlist. There you can find the videos on entry buffer. So all the entry buffer area here. Generally entry buffers before our high liquidity zones is an indication that our zone is also having a strong order flow. At least during the intraday we get a very good return. That is what happened today. We got a very good return. But whatever the return we got today, we achieved in just 5 minutes time frame. I mean, within 5 minutes, it reached the target. If you look into 1 minute candles, how we achieved this target, see here. This is the candle at 9:30 candle, and then 9:34 candle. It has given 1:5 risk reward. Or those who have set 6.1% ROA, maybe a little somewhere before, maybe by end of 9:31 candle, you might have exited. Somewhere at 9:31 candle, at the high of the or close of the 9:31 candle. Anyway, it doesn't make much difference. 1,000 rupees only additional money we got between 6.1% ROA and 6.7. That is 1:5 ratio. Why we adapted to this approach? The reason is the 15 minutes target is a very huge target. Mostly achieving this huge target during the intraday is not possible. Maybe you would have taken up for the delivery. Delivery means maybe a short-term trade, maybe tomorrow or day after tomorrow. Probably it may reach this target. That possibility. But if you want to go for a delivery, the rules are the supply demand zone rules you should follow strictly. What is supply demand zone rules? The trend, the location, the price direction, everything you have to consider. The strategy, whatever I have defined, the high liquidity zone strategy, that is applicable only for intraday itself. During intraday itself, you have to achieve, it should reach the target. Because the dynamics, once you take the trade for the delivery, that means you are carrying the positions for the next day or next to next day. If you are carrying your positions, market dynamics will be changed, the volatility levels will be changed. What happens tomorrow? Again prices go down, again it will go up, and here for few days prices will be moving within this area. That way your time will be taken due to the swings within this area, and finally after 4 days or 5 days it will reach the target. We don't want our time to be wasted. That's why we defined this strategy. See how much time it saved today. Just 5 minutes it finished your target, and remaining time you would have planned for some other trades, right? Because your money is released, you exited from your trade within 5 minutes, your trade is finished, your money is released. Apart from your investment, you also got additional profit of 12,500 rupees. Your capital is increased. Now with the new capital again, you can invest for some other trade. That's why always we are suggesting why we need to exit during the intraday. I don't want high liquidity zones trades should be specific to intraday trades. The unnecessary swing movements between days before reaching your final target, that takes your time. In that time, you may execute few more other high liquidity zones. During that time, you may get some more additional profit. If that profit, if you compare with a single trade carrying your positions to next few days, and whatever the money you are going to get in a single trade, or whatever the money you are going to get from multiple HLQ zones during as a part of intraday trades, if you combine both, finally you feel during intraday whatever the profit you are getting from high liquidity zones, that is going to be a more profit. Let us assume to reach this target, it takes next 4 days time. So finally, how much profit you get? You will get around 23,000 rupees profit you will get if it reaches this 15 minutes target. If you would have exited, today you got 12,500, maybe tomorrow one more HLQ trade might be a successful trade will be there. That may give you maybe 8,000 rupees profit. Third day, another HLQ zone might have been executed. That would have given you maybe another 7,000 or 8,000 rupees profit. Now, if you combine all these 3 days, 3 trades, you would have got over 30,000 rupees profit or 35,000 rupees profit. But this trade alone, if you carry for the next 2 days or 3 days, finally let us assume it reached after 3rd day or 4th day. Your profit would have been only 23,000 rupees. Why it will reach after 3 days or 4 days? Maybe sometimes because volatility conditions are changed, there could be some swings because of that. And finally to reach, it took some time. See, the moment prices entering into this zone, which zone? High liquidity zone, the pending orders push is giving a very good push. At least an average of 6.1 ROI push it is giving. That push might be achieved in 5 minutes or 10 minutes time period, or sometimes it may take 1 hour or 2 hours during the intraday to reach the target. Maybe today you got the return within first 5 minutes itself, but it won't happen every time. Whatever the return you got today in first 5 minutes, to achieve that return, maybe in some other trades it may take 1.5 hour or 2 hours time. Sometimes it may take 1 hour time. Sometimes it may take only 45 minutes time. But during the intraday, we are able to get that profit. That's why we are not carrying our positions to the next day. Hope you understand. But remember, this is a tricky trade. Today's trade, the reason is the target is far away, very far away. So that's why we have adapted the other strategy based on RRR, based on our average ROI, that is 6.1%. Why we have taken our trade directly on the 15-minute zone? The reason is the 5-minute zone, we have some doubts whether prices will be able to enter into that area. The reason is the 5 minutes risk zone, the price area is very, very small. There are higher chances of missing the trade. So that's why we selected 15 minutes. That is one reason. Second reason is 15 minutes itself is within our risk limit. What is our risk? 2%. But this 15 minutes zone itself is the risk is around 1.3, 1.25 or 1.3, around, not more than that. So with that risk, it is far below our expected higher risk during the trade. The 2% risk on our capital, whatever the futures lot size, on that margin amount, the ROI, whatever I calculate, the risk point of view, this is around 1.3%. So that is the reason why we planned our trade on the 15 minutes. That way it will become a successful trade. Those who are waiting for 5 minute zone, definitely you would have missed this zone. Because some of you don't want to lose even 1%. They want to lose only just 600 rupees or 700 rupees or 500 rupees. They don't want to bear the more risk, more than that much amount. That is 0.6% or 0.5%. So those people who expected very, very minimal risk, you would have missed a very good trade today. That's why risk management is very, very proper. You cannot optimize the risk at the least level. If you optimize the risk at least level, you will be missing very good number of trades. That's why you need to properly balance. Your experience will tell you, because sometimes you miss a trade. This is a good lesson for the people, whoever is waiting for a trade on the 5 minute zone. This trade is a good lesson for you. Now you understand how you missed a very good trade today. The minimal risk you have to take. So that's why always I'm telling you, you have to plan your trade on 5 minute zones, or if the risk is within the limits, you have to plan even in 15 minutes level. Either 15 minutes or 5 minutes. If 15 minutes, if the risk is within your limit, always look for trades in the 15 minutes level. Your risk is within your limit and the target is also, you have a good RR. RR also should be there, right? Because you are taking the 5 minute zone, even though the risk is within your level, but if RR is not there, what you have to do? You don't have any other option. Again, you have to further optimize that 15 minutes. But today, we have a 1:10 RR is there. When you have such a huge RR, there is nothing wrong in taking the trade directly on the 15 minute zone. And second thing is, it may not be able to reach the RR, this target, the 15 minutes target. So you will compromise. Once prices achieves 1:4 RR or 1:5 RR. You can't expect a good return beyond 1:5%, 1:5 RR. Anyway, here our calculations are not based on the RRs. RR is one justification to accept our trade or not. Mostly our justification is based on our average ROA 6.1%. That is our benchmark. So that way you would have got either 11,000 rupees 500 rupees profit, or 12,000 rupees 12,500 rupees profit on this stock. 12,500 profit is as per 1:5 RR calculations, which is 6.7% ROI. And this you achieved in the first 5 minutes itself. First 5 minutes of your trade. I mean, within the 5 minutes of your trade. It's not the first 5 minutes, it is within the 5 minutes of your trade. It reached the target. So this is about Bandhan Bank. And remaining trades are not executed. Next one is GNFC. This is a daily high liquidity zone. This is the fine-tuned area. Prices did not. Why it did not? There is a reason. Let me show you. We have already fine-tuned this to drop, base candles and a rally candle. You may say this is looking like a medium-sized leg candle. Yes, medium-sized leg candle. Sometimes a medium-sized leg candles might be part of the base. If already base candles are there, a medium-sized base candle, sometimes you may consider. After that you have a rally candle, or maybe after that you may have a drop candle. Sometimes that consideration will be there. These are all the exceptional scenarios. Okay, within this area what we did, we fine-tuned to 15 minutes area and 5 minutes area. So here within this we have a, first let me show you 15 minutes time frame. We have a drop, base, rally. This rally is with a pro gap. That point you have to observe. Even 5 minutes also, slightly we optimized the risk. Pro area. Today what happened? Prices entered into this pro area, pro gap area. Let me draw the horizontal line. See, from here to here there is a pro gap area. Within this area prices entered. The pending orders in this pro gap. See how it pushed the prices. Those who have taken a trade within this pro gap area, definitely it is a successful trade. But we won't take the trade because of the risk point of view. When you have such a huge risk, how can we take a trade? Because there are chances that prices will further go down and hit will the stop loss. If you take your trade here, how much loss we would have got? If the pro gap area, if you take the trade, still your distal line, if the risk is within the manageable level, at the time you can take trades in the pro gap area. You have to take actually. You have to take trade in the pro gap area when there is a pro gap. But here today the risk is not within our manageable level. So that's why we didn't plan any trade. But I'm telling you the reason why prices moved after reach from here. And next one is Lalpat Lab. This is also a daily high liquidity zone. Prices did not enter into this zone today. This is what we already fine tuned, but prices haven't entered. So no trade. And the last one is Balrampur Chini. This is a 75 minutes supply zone, high liquidity supply zone. This one is already tested. This is a 75 minute zone area. Drop for base candles and a drop. This one is already tested and then came down. So previously when it was tested, again a new 15 minute zone is created inside this. Because we are at 75 minutes high liquidity zone. So that's why we have to look for a fresh 15 minute zone. Here also we have a zone. We have a drop, base and again a drop. This is already tested. But this one when prices entered recently, we have a rally, we have a base and then we have a drop. Sorry, this is 5 minutes. Let me show you 15 minutes. We have a rally, we have 3 base candles and we have a drop candle. This is the 15 minutes area. Within this 15 minutes area, we found 2 5 minute zones. Fresh zones. This is the first one. Rally, base candles and a drop. And this is the second one. Drop, base, drop. See here recently means today only, not recently means. I mean today. Prices just before entering into this zone, there is a rejection. That means there is a strong order flow is there. Because there is a strong order flow, probably this zone might be a successful zone. Again, next time when prices came near to this zone, our software identifies this stock, probably we can plan a trade in the first 15 minute zone itself. In case due to any reason, if this is violated, what we do, we exit, again we will plan a fresh new trade on the above whatever the 15 minutes, 5 minute zone is there. If you combine both these zones and if the risk is within your manageable level, then what you can do, you can keep an entry in this zone and you can keep your stop loss on the upper zone. That way also you can plan your trade. If the risk is within your manageable level. But anyway, today prices did not enter. Just before entering itself, the order flow in this area pushed the prices down. See, this strong order flow is always a sign. It is a price action clue. What is the price action clue? Next time when prices are entering, definitely we can take a trade in this 5 minute zone. But this 5 minute zone is inside the fresh 15 minute zone. This 15 minute zone is inside the high liquidity zone. This is the way our confidence levels will increase whether to accept this trade or not. So these are all the high liquidity zones identified in our yesterday's report. And this is our analysis part. Now what we do, let us generate demand and supply zones, stocks near demand and supply zones for all the time frames. So let us start with yearly. Mostly you won't find any stocks, but let us generate. So let us find stocks near yearly demand zone, no stocks. And yearly time frame, let us find stocks near yearly supply zone, no zones. Let us change the time frame to half yearly. Let us find half yearly demand zone, stocks near half yearly demand zone, no stocks. And half yearly time frame, let us find the stocks near half yearly supply zone. So yesterday we have one stock near supply zone, now that is also gone. So let's go back. Next one is quarterly time frame. Let us find stocks near quarterly demand zone. So one stock is near quarterly demand zone. So let's go back. And quarterly time frame, let us find the stocks near quarterly supply zone. So 3 stocks are there near quarterly supply zone. So let's go back. Let us change the time frame to monthly. Let us find the stocks near monthly demand zone. So 2 stocks are there near monthly demand zone. Let's go back. See, this monthly, whatever the stocks you have seen, because previously in the, yesterday in Q&A 4 video, someone asked a question, how to plan swing trades or positional trades. That we can plan based on these quarterly stocks near quarterly zones. Anyway, I'll be showing you once this second phase of our training completes, so that it is useful to everyone who completed our course. But remember, this report will be helpful to you. Stocks near monthly demand zones and supply zones. So let's go back for monthly time frame. Let us find the stocks near monthly supply zone. So no stocks are there. So let's go back. Let us change the time frame to weekly. Let us find the stocks near weekly demand zone. These are the stocks near weekly demand zone. Even the same way, even for positional trading or swing trading, stocks near weekly demand zones or weekly supply zones also will be helpful to you. Because the higher time frame will be using monthly as a higher time frame or weekly as a higher time frame for MIT trades and WIT trades. Both are swing trades or positional trades. So we can make use of these stocks. We'll discuss these trade setups. I'll be explaining to you soon after we complete the second phase of our training. So let's go back. For entry time frame weekly, let us find the stocks near weekly supply zone. So 3 stocks are identified. So let's go back. Let us change the time frame to daily. Let us find the stocks near daily demand zone. So 5 stocks are filtered. Any high liquidity demand zones? We have Ramco Cement, already tested once. So only one high liquidity zone is there. But it is already tested once. So we need to look for a fresh zones, inside this daily zone. So let us maybe please analyze. You will be able to understand. So let's go back. Entry time frame is daily. Let us find the stocks near daily supply zone. 11 stocks are filtered. Any high liquidity supply zones? Bosch, but it is already pierced, so we can't take this zone. REC is also pierced, we can't take this zone. So no high liquidity supply zones on daily time frame. I mean no valid high liquidity supply zone. So let's go back to 125 minutes time frame and let us find the stocks near 125 minutes demand zone. So these 8 zones are filtered. Let's go back. Entry time frame 125 minutes. Let us find the stocks near 125 minutes supply zone. So 15 stocks are filtered. Okay, now let's go to, let us change the time frame to 75 minutes. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. 8 stocks are filtered. Let us check high liquidity demand zones. So we did not find any high liquidity demand zones on 75 minutes time frame. So let's go back. For 75 minutes time frame, let us find the stocks near 75 minutes supply zone. 17 stocks are filtered. Let us check any high liquidity supply zone on 75 minutes time frame. So we have HR motor, but always remember, check the structure of these zones. If the zone structure is not good, that zone will be violated easily. It is very, very important. You should not forget. Especially fresh zones, checking the zone structure is very, very important. So we have one HR motor. Next one. We have one more PVR Inox. This is also a fresh zone. So between this is high liquidity, moving between high liquidity demand zone and high liquidity supply zone. That's it. We have identified 2 stocks. One is PVR Inox and another one is HR Motors. Apart from that, on daily time frame, we identified one daily high liquidity demand zone. So total 3 high liquidity zones identified from daily and 75 minutes time frames. Okay, let's go back. Let us change the time frame to 25 minutes. Let us find the stocks near 25 minutes demand zone. So 4 stocks are filtered. So let's go back. 25 minutes time frame. Let us find the stocks near 25 minutes supply zone. So these 8 stocks are filtered. Let's go back. Let us change the time frame to 15 minutes. Let us find the stocks near 15 minutes demand zone. So 2 stocks are filtered. So let's go back. 15 minutes time frame. Let us find the stocks near 15 minutes supply zone. So 6 stocks are filtered. Let's go back. Let us change the time to 5 minutes. Let us find the stocks near 5 minutes demand zone. So 6 stocks are near 5 minutes. These 6 stocks are filtered. Let's go back. 5 minutes time frame. Let us find the stocks near 5 minutes supply zone. So these 6 stocks are near the 5 minutes supply zone. So this is about our filtered list for the stocks near demand and supply zones for all the time frames. I wish this information is useful to you. Let us meet again in our next video. Thank you.